Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Shreve here with a breakdown of the action in today's session, Thursday, September 5th, where we saw the Nasdaq fade after a strong start. It managed to close in the green, but red everywhere else, Ken.
Yeah, tough day for the Nasdaq in particular. Faded a 1.2% intraday gain. So tough day overall for the market. But found three stocks to talk about. Really like the look of pullbacks currently for JPMorgan and also Alamos Gold. JPM is the ticker for JPMorgan. Alamos Gold is AGI. Gold stocks did outperform today. And finally, a biotech that broke out powerfully, cleared a buy point with conviction. Argenx, ARGX.
Okay, well, we will take a look at those three stocks, but first, let's analyze the major indexes. As you mentioned, Ken, the Nasdaq fading here and closing up just 0.25% after a strong start. The S&P 500 in the red, down 0.3%. Steeper losses for the Dow, down 0.5% today, and the Russell 2000, the hardest hit, down 0.8%. And I'm seeing key levels breached for a lot of these different major indexes, Ken.
Yeah, I mean, not harsh violations, but certainly the S&P 500 is struggling for support at the 50-day moving average. It's basically closed right at the line. A couple sessions in a row, looks like it closed just below it, and also gave up the 5,500 level. So, obviously we've got a big jobs report tomorrow that I suspect the market is going to move one way or another. We had a weak ADP report this morning, and signs that the labor market is softening. So whether the market wants to see a really strong report or if it wants to see a weak report, I suspect it would like to see an inline number around 160,000, maybe even a little better than expected, as opposed to a big miss like we saw the last month. So yeah, so the S&P 500 battling for support here. Back to the Nasdaq. Again, that was a 1.2% intraday gain that faded down to about what a quarter, like you said, 1/4 of 1%, 0.25. So we've been talking about a clustering of distribution days that we've seen on the Nasdaq, including that pretty harsh sell-off earlier this week on Tuesday when it was down more than 3% in higher volume. So when you see an index under distribution like the Nasdaq, it raises the likelihood that it's probably going to stay underneath this 50-day moving average for a while, maybe consolidate a little bit more. But again, we could get good news on the job front tomorrow, and the market's been so volatile. We could get a nice pop for the market too. But Nasdaq showing some warning signs here. Caused a lot of people to raise some cash earlier in the week. So
Right.
Nasdaq looks a little vulnerable here, but lots of good areas of the market still outperforming and doing well.
And you outlined, the different scenarios that we could see with reaction to the jobs report tomorrow. So being on the lookout for a potential upside move, but also keeping an eye on the recent lows here and maybe an undercut of that level. We do have the follow through day low from 813 right around current trading level. So it's seeing further deterioration is not what the bulls want to see, of course, here, Ken. But as you said, we'll be ready for anything come tomorrow.
Yeah, I mean the uptrend is clearly under some pressure here, maybe more so on the Nasdaq, even though the S&P 500 did lose that 5,500 level
Yeah,
today.
hold
So
right around it. Oh,
right around it,
hair
yeah.
above it,
So
I
yeah,
think.
it was a bad break for the S&P 500 on Tuesday, but it held the 50-day moving average. Could have extended losses yesterday. It ended up being an orderly decline, but today, bled a little more, closed near lows. Doesn't look like we're going to add a distribution day to the count. Nasdaq volume is very, very close. It's only a 0.25% decline. So it and volume is very, very close. So we may be able to skirt distribution, but again, we're dealing with a vulnerable market here, and talking about tech stocks looking vulnerable, but other areas of the market looking pretty good, insurance and gold and things like that.
Mhm.
So there is some leadership out there, but I mean, do we really want to rely on utilities, gold stocks and insurance stocks to provide, meaningful market leadership? It's possible, but you typically like to see, stronger leadership than that.
hmm Well said. And then quickly taking a look at the Dow here, closing right at its 21-day line today, Ken.
Yeah, it's probably the strongest index at this point because it's still holding above short-term support levels. Now, obviously, you have that 40,000 number that the Dow could try to test here. That is just a little bit below its 50-day moving average. But it's one reason I wanted to talk about JP Morgan today. Just that there's some decent-looking blue chip stocks that are trading well in this uncertain environment. So Dow still looking pretty healthy here.
And the Russell 2000 falling below its 50-day line in today's session, Ken.
Yeah, just like the S&P 500 battling for support and not finding it yet. We'll see if it can retake the line tomorrow, or maybe it extends losses depending on what the jobs numbers look like.
So now let's turn our attention to JP Morgan, a very orderly pullback here, Ken. As you said, financials in the spotlight right now with their recent outperformance.
Yeah, I mean a really strong move after J.P. Morgan hit that low of 190.90. Not a whole lot of volume as it rallied back, but still several up days in a row. I think it only had one or two down days during that 3-week run or however long it was. And now you've got a fairly orderly pullback here that's happening in light volume and holding at the 21-day exponential moving average here. So a stock that has dipped back into a buy zone, never really left a buy zone, but now it's pretty close to that 217 pivot. So if you're people looking to put money to work in this market, I think financials still look pretty good here. J.P. Morgan's pullback looks quite constructive.
hmm That it does. And the relative strength line continuing higher over
Hmm.
the last couple months. And now let's see AGI gold stocks, which you mentioned as well, also in focus here. Alamos Gold finishing up by about 0.5% on the day. So give us the scoop on what we're seeing with these shiny stocks.
Well, yeah, the dollar weakened again today. So when the dollar is kind of weak, the gold stocks tend to outperform. Now it was Alamos tried to hold a decent gain today, but it closed pretty much near the bottom of its range. Still rallied about 0.5%. But this is another example. Still a lot of extended gold stocks out there. We've got Agnico, Eagle Mines, AEM on leaderboard. This one is still kind of trading near its 21-day moving average. But back to AGI, this one is kind of pulling back in constructive fashion. Really, I'm looking at on the daily chart that 1791 pivot, which was the second really buy point because AGI initially broke out over 1729, really didn't make a whole lot of progress, and then got very volatile, hit that low of 1574, and then it zoomed back up and reclaimed that 17 pivot there. So at 1838, pulling back, maybe wait for the stock to firm up here and a good up session and decent volume, and I think that would make the stock buyable. Been under pressure for 3 days now and coming close to testing that prior pivot, but pullback is looking good here. Just wait for the stock to firm up a little bit, maybe wait for some buyers to come back in here.
So, pulling back within an uptrend, and Ken, we do have rate cuts right around the corner. So, how should investors be thinking about gold in their portfolios in a rate environment that's soon to change? It's looking like here soon.
Well, that lower rate environment should provide a pretty good ceiling for the U.S. Dollar. I mean, even if you look at UUP, which is basically a long U.S. dollar index ETF. I mean, this is still on a downtrend. You see, it got close to its 200-day moving average after a 3 or 4-day rally. So I suspect that 200-day line could still be a resistance level, but in a lower interest rate environment, we know the Fed's going to start cutting rates in September. The odds for 50 basis points have increased a little bit. They fell back. Today after that weak ADP report. But yeah, U.S. dollar is really not looking like it's going to make any meaningful attempt to turn higher here. Still has some overhead supply to get through and stuck below some key moving averages. So again, those can sometimes be resistance levels. So prospects for a weak dollar, should and lower interest rates should bode well for gold.
All right, well, we'll have to see. And then ARGX, an A there, RGX, if I can type that in. Biotech stocks have been looking interesting lately, compelling here with Argenx. A nice move today, up 4%.
Yeah, the fund sponsorship in this name is really exceptional. We can look and see some of the top rated growth funds that currently have a position. T. Rowe Price, New Horizon. You just see a bunch of Fidelity contra funds. So lots of good funds in this name. They have several fireside chats taking place today, and they had one yesterday, and I didn't see any specific news, but their main drug here is Vyvgart, which treats sort of a muscular skeletal weakening muscles, and it's injected under the skin as opposed to intravenously. You can see that drug has really shown great top line growth. The company has shown great top line growth in recent quarters, so they're selling a lot of Vyvgart, and growth prospects still look bright. On the weekly chart here, you see this big long base and a really nice little handle that formed in recent weeks, and a good solid breakout today. So, not a whole lot of good news in the market right now, but Argenx made a nice breakout today, closed up near its high. Volume expanded, so based on that buy point of 540.49, still easily within that 5% buy zone.
Yeah. And can you make such a good point where, even if the index level action has been deteriorating underneath the surface, there are some gems. Sometimes they're hidden gems. Sometimes they're a little bit more easily uncovered. But either which way, I think it just goes to show how important it is to actively manage your portfolio and take a look underneath the surface. And there are times when the indexes can come under pressure, but individual investors can still get that outperformance with stock selection and proper risk management.
Yeah, no doubt about it. And if for those that recognized, the early signs of weakness in Nvidia, that was around the time we started to see, insurance stocks and just a lot of these sectors of the economy that are showing, renewed strength. So, as Jim Cramer likes to say, there's always a bull market somewhere. We have recognized again some increasing signs of distribution in the Nasdaq, which can presage, more weakness. But I think it's still too early to give up on the uptrend just yet, because there is, good leadership out there, not necessarily coming from large cap tech, but several other areas of the market: utilities, insurance stocks, some retailers still hanging in there. So there's reasons to be optimistic, but again, I think a lot of this is going to be predicated on what those jobs numbers look like in the morning.
All right. Well, we know you'll be watching, and so will the rest of the team. IBD Live will break everything down in the morning in real time, starting 10 minutes before the opening bell and then running through the first 90 plus minutes of trade. So we hope you join us along with our special guest, Don Vandenborg, a longtime IBD style trader and portfolio manager. So we will see him on the show in the morning, and you can join us by going to investors.com/IBD Live for all the details. So we'll see everyone there, and then we'll also see you back here tomorrow after the close.